Hi friends, it's Strifor with you, and in this video we are going to talk about the economy of one of the most exciting and contrasting regions of the world. On the one hand, Africa is the second largest continent in the world and a treasure trove of valuable resources with great potential. On the other hand, it is the poorest continent with many financial and political problems. In this video, you will learn which countries are actively attracting investment and developing their economies, and which ones live in poverty despite their natural wealth. How Africa has become one of the leaders in the growth of cryptocurrency use. Why China invests in Africa more than others, and what resources are extracted in continental countries. How the colonial period affects the economy despite the fact that it ended more than half a century ago. And before you start watching, please subscribe to our channel and turn on notifications so you don't miss other interesting videos. Africa is a veritable treasure trove of natural resources, producing about 40% of the world's gold and 90% of its platinum reserves, as well as significant deposits of diamonds, oil, natural gas, and cobalt, which may be more important than the other resources listed. But we will come back to that later. Africa also has large reserves of phosphate rock and rare earth metals, essential for high-tech industries. But why don't these resources save countries from financial problems? Let's take the example of one of the continent's largest economies. About 70% of Nigeria's revenue comes from oil exports. At the same time, gasoline or diesel fuel produced in Europe and the United States from African resources is sold back to Nigeria at a price 2 or 3 times higher. The reason for this industrial disparity is that 70 years ago, there were only 2 independent states on the continent, Liberia and Ethiopia. All other countries were European colonies, and their economies were focused exclusively on mining and exports, while the metropolises developed processing and high-tech industries. For example, iron ore and oil from Africa were used to build factories and plants in Europe, but the southern continent did not develop the infrastructure for refining. This left African countries dependent on raw material exports even after gaining independence. Also, after decolonization, many countries faced a lack of skilled human resources and management experience to effectively use their wealth. And some of the decisions of the new leaderships have exacerbated this problem. For example, Zimbabwe, by deciding to expel white farmers in the early noughties, lost the managers who had ensured stable agricultural production. The result was the collapse of the agricultural sector, which caused a devalued currency, mass starvation, and record hyperinflation that amounted to, mind you, almost 90 sextillion%. That's a number with 21 zeros. Zimbabwean citizens could buy a loaf of bread for just 550 billion Zimbabwean dollars. High inflation, albeit on a smaller scale, is also common to other African countries. This has suddenly made Africa one of the leaders in the use of cryptocurrencies. Digital money serves as a bailout for funds in the face of depreciation. Also, 57% of the population does not have access to banking services, so cryptocurrencies serve as an alternative to domestic and international payments. The leading African countries using cryptocurrencies are Nigeria, Kenya, South Africa, and Ghana, and the most popular coins in Africa are Bitcoin, Ethereum, and Tether. By the way, with Strifor broker, you can trade these and other cryptocurrency pairs CFDs on competitive terms. In Nigeria, cryptocurrencies have become so popular that the country's central bank launched its own digital currency, eNaira, to offer a more regulated alternative to cryptocurrencies. Another well-known digital startup is Kenya's M-Pesa, a mobile payment system that allows people in rural areas to access banking services. It has become a model for developing countries as it provides access to financial services in underbanked regions. This success has inspired the launch of similar services in India, Pakistan, and other countries, helping millions of people participate in the financial system. Another country, Rwanda, is emerging as an innovator in agro-technology that helps local farmers optimize agriculture in the face of climate change. And here is a small island in the Indian Ocean with the highest wealth per capita in all of Africa. Mauritius is categorized as an economic wonderland. Since gaining independence from England, the government has built a balanced, diversified economy, emphasizing foreign investment and exports of agricultural products, mainly sugar. And it has also emphasized quality education, tourism development, financial services, and the IT industry. It is in this country that Strifor Broker received its license and is regulated by the Mauritius Securities Commission. Africa is becoming increasingly innovative, which is changing its economic landscape. This is largely due to the demographics of the region. Africa is the youngest continent. Approximately 60% of the population is under the age of 25. This creates unique prospects for business development, as young people are actively adopting new technologies and innovative business models. And by the middle of the century, according to forecasts, the population may almost double. But let's go back from digital innovation to more traditional resources. In front of you is a table showing the top 20 gold mining countries. Among them are 8 countries from Africa, more than any other continent. However, only Ghana is in the top 10, with the rest of the countries well below. And here is the same table, but taking into account the density of gold mining. Here Ghana is already in first place, and the leading positions are occupied by 6 African countries. What does this tell us? First, that the country actively and efficiently uses its natural resources on a relatively small territory. Such concentration simplifies logistics, reduces extraction costs, and stimulates the local economy. Secondly, the fact that for many African countries, gold is a key export commodity, which makes the economy vulnerable to fluctuations in world gold prices. By the way, our channel will soon publish a detailed review of the precious metals market in which we will talk in detail about investing in this sector. Subscribe so as not to miss it. The main buyers of African gold are China, India, and the countries of the Arabian Peninsula. However, despite the importance of gold and oil exports, there is another metal, thanks to which you are watching this video from a smartphone, tablet, or laptop, thanks to which artificial intelligence or the electric car industry is developing. It's cobalt, a key component of the microchips used in the creation of these innovations. Few people know that the treasure trove of high technology is located in one African country. 70 of cobalt reserves are mined in the Democratic Republic of Congo. And of course, China, as one of the main producers of electronic devices, is its main buyer. Examples of gold, oil, cobalt, and a host of other minerals literally make the world's major economies dependent on Africa. But this dependence works in the opposite direction as well. China is the largest investor in Africa, with total investments exceeding $100 billion. The One Belt, One Road project consists of China building infrastructure such as railroads and ports to facilitate trade and resource transportation. In doing so, countries become directly and dangerously dependent. An example of a debt trap is the port of Hambantota in Sri Lanka. When the country went into default and could not recoup its investment, it was forced to hand over the port to China for 99 years. In addition to China, European countries and the US are actively investing in Africa. Emerging markets offer higher yields compared to low interest rates in developed countries. In addition, high volatility and instability in traditional markets encourage investors to look in new directions. Finally, Africa has vast natural resources to meet the world's demand for raw materials. One important initiative for economic growth and improved living standards is the agreement on the world's largest free trade area, covering all African countries except economically isolated Eritrea. It aims to simplify trade and reduce customs barriers within Africa, allowing countries to develop domestic markets. Domestic trade is expected to double by the end of the decade, opening up new opportunities for local businesses and creating more jobs. Now, the largest economies in Africa are Nigeria, Egypt, South Africa, Algeria, and Morocco, with high GDPs. A free trade agreement is in force. Natural resources are being actively exploited. Large foreign investments are pouring into the economy and growth rates are skyrocketing. But it should not be overlooked that these high rates are dictated, among other things, by the extremely low starting point. An important footnote in most positive forecasts is that poverty levels will still remain high. After all, a continent consisting of countries that gained sovereignty less than 100 years ago is undergoing a complex stabilization process that may take tens, and in the case of some countries, even hundreds of years. This is Makoko, one of the neighborhoods of Lagos, Nigeria's largest city and former capital. Recall, Africa's largest economy. Local people live in extreme poverty and are forced to build homes on water. Many parts of the major oil supplier, South Sudan, lack schools and basic infrastructure, and 2/3 of the country is not literate. Notorious Somali pirates still pose a major threat to international supplies, and the local population is often involved due to lack of jobs and political instability. Surprisingly, Piracy became almost the government's main source of income for 3 years when a pirate exchange was set up. People could invest in attacks on ships, both with money and weapons. From successful raids, pirate shareholders received dividends that could reach thousands of % annually because the profits were huge. For example, the capture of the Greek tanker Marin Centaurus became a record for the amount of ransom, $7 million. However, with the strengthening of the international fight against piracy, this exchange ceased to exist. Another problem that should not be forgotten is climatic conditions. Droughts and cyclones, as well as locust infestations, have led to a humanitarian crisis in Madagascar. More than 2 million people are severely food insecure. In Niger, last year saw the 5th military coup in less than 70 years, leading to a major crisis. There are still many problems in Africa, and they may take a long time to be solved. Therefore, investments in the continent should not be viewed as a guaranteed profit, just as its high economic potential and important role in the world economy cannot be underestimated. Therefore, traders and investors should closely follow the news of Africa. After all, they have a great impact on the prices of gold, oil, coffee, and hundreds of other assets, even cryptocurrencies. And with Strifor Broker, you will be able to apply the results of your analysis on competitive terms to trade contracts for differences in commodities, precious metals, forex currency pairs, cryptocurrencies, stocks, and stock indices. Analyze the news, expand your economic horizons, and subscribe to our channel to not miss other interesting videos. See you in new episodes.